Hi, this is Bill Joyce, and I'm the broker at Charter Home in Sacramento and a blogger at survivingtheamericandream.org. While I'm an advocate for home ownership in general, I've seen the kind of pain and suffering a poor home choice can have on a family's finances, marriage, health, and overall happiness. I believe the oversold and underdefined image of dream home encourages people to spend far too much money for the wrong kinds of things. Buying a house doesn't get you the life you imagine, or the time to live it, any more than joining a gym will make you fit. It takes discipline and effort to create the things you dream of. You can't simply buy them. Join me while I interview experts in various fields like financial planning, marriage and family therapy, career counselors, life coaches, as well as happy and unhappy homeowners willing to share their hard-earned wisdom. Today I interview ChristianDy, a financial advisor in Vancouver helping clients with financial planning, investing, and insurance. He's an advocate for financial education and conducts workshops teaching people to make better financial decisions. Christian says Vancouver has very high housing costs relative to income, making it a very challenging place to live, work, and buy a home. Christian, how do you advise a young couple or family when it comes to buying a home in a high-cost area like Vancouver?
So essentially over here, because I deal with a lot of young couples, lots and lots of young couples, and because in particular, as I mentioned, that my market, the Vancouver market, is so overpriced, it's so hard for young people to get in. It's 5% down to get in for a first-time home buyer, and I guess if they have stable income, that's the first thing. If they have stable income and they've got a priority to get a down payment, I think would come first. And I think one of the mistakes that people make, especially if they have a child, is sometimes they tend to prioritize. I have to save up for my kid's college right away, and maybe the banks or something will be encouraging them to do that, but they don't own their own home yet. Or they'll say, well, where's your 401k? How's your retirement? You better start saving for that. But I really think that purchasing a home is probably should be the first thing on the list. And then the challenge is, okay, well, now I got to come up with a down payment. Whereas those other two options are much easier. It's just a monthly payment. It's just, for your retirement, let's start putting away $300 a month. Or for your kid's college, let's start putting away $100 a month. But the problem is, then it starts taking away from your cash flow in order to save up for your down payment. And I'm a math guy. My background's in math, and I got an MBA in finance. And the math isn't complex. If you're putting away, let's say, $300-400 a month towards your down payment, how long will it take you to get a down payment? Now, here in Vancouver, it'll take you forever. People just don't know the numbers, so they just feel they're making progress because they're putting away $400 a month, and they think they're going to have this down payment in a year or two. But they don't know enough of the numbers to realize that it just isn't going to be enough. Then what we sort of find here is that you got a lot of well-intentioned people graduating in their mid-20s, but now they're in their 30s and they still don't own. Now they're reaching mid-30s and they still don't own. They still don't have that down payment because our cost of living is so high, and they never worked out the numbers at the beginning. So when I give these lectures at the university to graduating, and we're talking graduating medical students, law students, pharmacy, dentistry, these are high-end professionals with huge loans, I tell them the fastest way from A to B is to deal with the housing issue. So what I mean by that is, for example, if your parents are offering to let you continue to live at home, or if you're in a two-bedroom apartment or as a student or making little to no money, and then all of a sudden you jump to making quite a decent income, I tell them to not change their living condition, not until that down payment is done. So a good example is if your parents would allow you, let's say you've graduated as an engineer, you're making $40,000 a year, and your parents are offering that you could still continue to live at home, I say do not move out until you've got a full down payment. I think the mistake that a lot of people make, young professionals, is that when they finish school or when they get that first job, they look too closely at income, where they should be looking more closely at income ratio. An income ratio is very simple. You take all of your expenses and you divide it by your income, and that number will be a percentage. So if you are renting a place, you graduate, you lease a car, you rent a nice apartment downtown, you're going out to restaurants, you could make $100,000 a year. But if your income ratio is 98%, which basically means 98,000 out of every 100,000 is going towards, your expenses, taxes, mortgage, taxes, rent, everything, you're not going to have a lot left over. And so income ratio is far more important. So that's why if people stayed at home, their income ratio would, be 40%. It would be, or 50% or 60%, but it's all of that extra money that can go towards a down payment or to go towards prioritizing paying back your loans to get you into that down payment much faster. And I think that's sort of a mistake where you take two people, let's say two graduating teachers. One decides to stay at home. The other decides to move out right away. The one who decides to stay at home, let's say it takes them 2 years, then they buy their first 2-bedroom apartment. They take that second bedroom and they rent it out to a friend. Now, the first person rented right away and got a roommate. So these are two people renting an apartment, living as young teachers. And what you find is that they don't make much ground in terms of savings. Whereas the first person is already in that place, and that's the formula I love, where you save up enough for a down payment, you're young, so usually young people like to live with roommates anyway, but you buy the place, the 2-bedroom, but you rent out the second bedroom to a friend, you own the property, you now have got someone helping you to pay down that mortgage, and you're living the same lifestyle you would have lived if you just rented anyway.
What you're saying there is you would encourage families starting out, young couples, to basically sacrifice that new lifestyle they've been wanting and are able to have in favor of saving and being disciplined and squirreling money away.
Exactly. In the early years, and this is the number one reason why I say that, it's because I like to consider myself a bit of a transition expert. I usually talk to people when they're in the transition to getting married, transition to graduating from university. But the thing is, I want you to think of, imagine if you were a teacher. Again, I'll go back to that teacher example. But you had rented, you had lived on your own, and it's now 5 years later. 5 years later, you're used to this very independent lifestyle. You sit down with a financial advisor and they say, listen, you're never going to have a down payment unless you do this, this, and this. And one of those suggestions is to move back home because you don't make enough money to save up for a down payment. It's so hard to go backwards. It's almost impossible. Somebody says, hey, listen, I've been living downtown. I've been my own person for so many years, or maybe I've got a boyfriend or a girlfriend, and you're telling me to live back home? You're telling me to sacrifice? You're telling me to live in a 1-bedroom, basement suite in my parents' house? I can't do that. And they're right. They can't. But when they're in that transition, they don't know any better. They haven't lived that sort of more luxurious lifestyle off of that income. So for them, the step, it's nothing. There is no step. Like if you kind of live like a student lifestyle and then suddenly you're not a student anymore, but the only lifestyle you've known for the past 4 years is a student lifestyle, all I say is extend it by another year or two until you have that down payment. Because what you'll end up finding is, like I said, it's that 5-to-1 ratio. I've given this advice over and over again to people here in the Vancouver area. As soon as people ended up getting that home, a few years later, they're building up equity, housing prices keep going outrageous over here, they've always returned to me to thank me. And they said, you know what? The year went by fast, or the 2 years went by fast. The sacrifice went by fast. And for them, it wasn't even that big of a sacrifice because that's the lifestyle that they were living the years prior anyway.
Interesting. That makes so much sense. And it's when you give that advice, so you give that advice to 10 people, how many take it? How many are, in your experience, have the discipline to not spend, to not embrace that new opportunity for a better lifestyle?
You know what? It's more of a character. It really is more of a character. I'd love to say 10 out of 10 are going to take my advice because they just see the math and they say, yeah, it works. But it's not the case.
Right.
A small handful will. Though I think it almost comes down to two things. One, do they have the discipline to actually do it? Mm-hmm. And number two, do they have the situation that will allow it? Some of them have the discipline, but they don't have family that lives in town. They don't have those resources. They can't lower their housing situation. Maybe they already have one child. And, it's so, like, if you are in that opportunity where you could do it, and you've got the discipline and you're willing, then absolutely. It gets more complex when you're a couple, because now you have to convince the other person to do this. And I do a marriage prep talk, and there's probably 50 couples in that room. And when I give that piece of advice, a lot of times people approach me afterwards asking, can we have a meeting? Can we talk? And they said, well, how is this going to work out? And I know in this last week, I've talked to 3 different couples, and I know the one said that we're not married, we're engaged, we're getting married this year, and I live at home and she lives at home. And after your talk, Christian, we've decided to move into one of our homes. We've already discussed with both of our parents, and we're going to live in the basement suite of one of the homes. I told him right away, which home is it going to be? He said, oh, well, my wife would prefer to live in her home. And I said right away, just do that. You're going to have less friction, just happy wife, happy life. And if you could handle that yourself, he says, yeah, you're probably right. He says, because the longer your wife and you are willing to stay there, because if she's living someplace that she hates, trust me, happy wife, happy life. 6 months, all of a sudden you got to move out. Whereas if she likes it there, you might last 1 year, 2 years, 3 years until you have that down payment. And these guys, they make an all right income, but nothing too spectacular. But we worked out the numbers. I said, 18 months, you'll have your down payment. 18 months by living with your in-laws, you'll have your down payment. And all of a sudden, we had a plan. And what they were planning on doing says, oh, it's our first year of marriage. Let's go rent a nice apartment. We've never lived anywhere except for home. Now we're getting married. They're in their early 20s. Says, now we're getting married. We thought we would rent in a nice place. We would start our lives off wonderful together. I sort of reversed that a little bit and said, that's waiting for you for the next 50 years, but just give me the first 18 months. Do what I'm telling you to do for the first 18 months. I know it's not ideal, but here in Vancouver, that is the reality, because our housing prices is so expensive. People need a plan, and if they don't have a plan, they just wander around aimlessly, just hoping to one day have a down payment or some sort of a strategy, and it usually doesn't work when you don't have a plan.
Well, let's talk about planning a little bit.
Sure.
I've equated a home purchase to basically a life planning exercise that rather than a purchase like you're buying a car or television, it really is going to impact just about every aspect of your life, like your marriage. Getting in very deep financially is going to create money stress. And money stress is an issue in marriages. It's so when you make the decision to buy a home that's stretching you, it's going to have impact on your marriage. If it's further away, so you want the big house, and if you're willing to commute further, you get a bigger house for the same amount of money. But that equates, an extra 10 minutes each way to work is 80 hours a year in commute time. So the proximity of a home is going to affect the things that you do, how often you go to the gym, the amount of time you spend commuting to work, where it is relative to the things that you like and want to do becomes a part of your life. So rather than just buying a pretty house and thinking about things like, a nice yard and granite and nice sized bedrooms, thinking about the impact that a home will have on other parts of your life. Can you share just your experience, and as you walk through this decision with your clients, the kinds of ways you've seen a home purchase impact lives?
Essentially over here, my advice to young couples when they're in the looking at a certain area is I always advise them to buy in the area and to sacrifice space over location. And the reason why I like location a little bit more is because with the location, you can always upgrade in the location and you're kind of protected against the market fluctuations. Because if the market goes up, well, you bought in that area, your values will go up. If the market goes down and you're upgrading, that's actually even better. because the larger place will have taken a bigger hit than what you will have taken. And the thing is, you could always make a home, a smaller home, nicer, but you can't make a larger home change location. And if your location is, you're surrounded by family or friends, or it's close to work and, lifestyle, that's a pretty big thing to sacrifice just for a little bit of a larger home. And I understand if kids come along, that's a different story. But even then, I would still not sacrifice location. I would just get a little bit of a bigger place, as opposed to pulling that trigger from a 2-bedroom to a 5-bedroom house with a huge yard.
That's interesting. We have grown culturally to like bigger houses.
Yes.
Just 50 years ago, my grandparents had this tiny little house, and they raised kids there. And when I was a kid, I shared a bedroom with my brother, and those are almost unheard of these days. The idea of kids sharing room, that everybody gets their own room, and then there's an extra one, seems to be what people would like to have. That being the ideal.
Well, Bill, I'll give you a quick statistic over here. A generation ago, the average home was 1,100 square feet, and the average kids in a home was 3.5. Today, average home is 2,000 square feet, and the average kids per home is 2.5. So we've almost doubled our homes, and we've lost a child. Now here's another ratio for you. Okay, income to housing ratio 30 years ago was 3-to-1. And what that means is this. It means if you made $10,000 household income 30 years ago, then the house that you bought was approximately $30,000. So that's a 3-to-1 ratio. Does that make sense?
I got it.
Today in Canada, and I'm not sure if this is a Canadian or a North American statistic, but it's 6-to-1. And in Vancouver, where I live, it's 9.8-to-1. Which means that if someone's household makes $100,000, these guys are buying $1 million house, 9.8 ratio. And there are people, when I've shown this to them, and they're saying that number is low. They're saying 9.8. They're saying $1 million house. What can you buy for $1 million here in Vancouver? And it's true. $1 million does not buy you a lot in Vancouver. There are people with $100,000 households, and these guys are buying $1.4 million houses, because they can't find anything for $1 million.
Okay, well now these are staggering statistics, and I believe it's true. It's changed. The amount of money that we spend on houses has changed from a generation back, which is what those figures say. But I think we're still relying on a generation or more back's view of housing and home ownership being an investment and a nest egg and a place where your money can grow safely. But it was a nest egg when it was 3-to-1. Does that change when it's now 6-to-1, or in extreme markets? Is it no longer a nest egg? Is it, does that apply, or should we step back and rethink the math? When is it now just a burdensome expense?
Yeah, no, I agree. And I guess it's like any good investor. They say don't put all your eggs in one basket. And I think, where will housing be 25 years from now? We can make a projection, but I wouldn't want someone's entire life savings to be their home.
Right.
And I think that's a lot of times what's happening. Like a formula that I give, to give some of your listeners some numbers over here, I always say, to stay conservative, you should try to have mortgage around 3 times household income. So that's not the value of the home. That's just the mortgage. So if you have $100,000 household income, the amount of mortgage you take on should be about $300,000. And for some areas, that's totally reasonable. For other areas, it's not. But what I find is that if you stick to that number, you still have money left over to invest in your 401k.
Mm-hmm.
You still have money left over to, take your family on vacations. You still have money left over to do other things with. But when you start pushing that number, so in reverse, that number looks kind of like this. It's try not to spend more than 35, around there, 35%. So 1/3 of gross monthly gross income should be going towards home. Only about 33% of your gross income should be going towards your home. And the problem is in some areas, like my area, we're looking at 40, 50, even as high as 60% of people's gross income is going towards their home. And if you do the math, they've got no money left over to do anything with.
Right.
There's no savings. There's no, and the reason why I'd like to talk about family as well is because that's an investment. Your family is an investment, because I know a lot of people who, whether it be divorce or separation, where now they are crippled financially. They've got half of their income going towards this other person for the rest of their life, or half of their assets going to someone else. I've got a good friend who's a surgeon, and his advice to this young group of doctors that he was lecturing to from a financial standpoint was invest in your first spouse. That's the greatest investment you can make, in your first spouse. Why? Because if you end up separating or divorcing from that first spouse, well, good luck trying to build any assets for the rest of your life. And so that's why I always say keep the large expense is housing. Keep that number under control so you have extra money to do other things with. And I invest in real estate as well. So not only do I have my own home, but I need extra cash flow. I need extra money so that I could save up for whether it be putting money in the markets or putting money towards another down payment. So I'm a firm believer in real estate, but I'm just not going to tie all of that up into my own personal home.
Right. It goes back to what you were commenting on before, the sacrifice, and telling young people while they're in transition, don't just change the lifestyle, when your income goes up. Keep the old lifestyle and start sticking money away. And that is a sacrifice first mentality, and then get the benefit. And we've
Absolutely.
made it in the United States, we've made it very easy to not have to sacrifice. You can get a very low down payment, and you can mentally choose to sacrifice later.
Yes.
And I don't know that that's a good thing. I think a lot of, it's easy to join a gym. It's hard to get up early and go.
Yeah, I agree. And I think one of the big problems in the U.S. and in Canada, the student loans are just so working against the young person these days. You really have, you got really educated people, whether it be doctors or lawyers or teachers or engineers. But the way the student loan system is set up now, something new has got to be put in place. And the only thing that I could recommend is stay at home until the loans are done, until the down payment is there. And I know it's terrible. It sucks. I'm a young 23-year-old male, and I've got this opportunity. These are the best years of my life, and you're telling me to live in my parents' basement suite rent-free when I could be living in a nice apartment, driving a nice car. Unfortunately, the math and the numbers are working completely against you. And I sort of find that those are the sacrifices you have to make in order to make it work. But you'll be sacrificing your 20s, but you're going to be, appreciating it all the way in your 30s, 40s, and 50s.
The rest of your life, yeah.
Yeah, and the other piece of advice that I give is I call it a stress test. And when you go to the bank and you get a mortgage, what's happening over here is that the bank will typically ask you questions of, what is your income? How much do you, what are your expenses? Or let's say for a couple, what is your income? What are your expenses? Show me your debts. And then what they'll come back with is, this is how much home you could afford. And of course, when somebody tells you that's how much home you could afford, then you're like, okay, great, I'm going to start looking at that home. So for example, here in Canada, here in Vancouver, someone might say, oh, based off of your guy's qualification, you could afford a $600,000 home. So like, great. So they start looking for a $600,000 home. I always say, don't fall in love with that number. I say, a back of the envelope is chop a third off of it right away, 1/3. So if they say 600, you think 400, because it's easier to go up than it is to go down. And the bank is not going to ask you, when are you guys planning on having kids? Are you going to be single income for how long? Do you have daycare expenses coming at you? They're not going to ask those questions. So I ask those questions because, okay, how long are you going to be off? Oh, at least 1 year. Okay, so that's 1 year where you guys are not on dual income to pay for that mortgage. What's the daycare situation going to be like? Either one of the spouses is taking time off, so again, less income, or they're paying these $1,000 to $1,200 per month of daycare costs per child. So where is the makeup going to be for the mortgage that you qualified for? So that's my stress test. My stress test is I actually do with my clients. I actually have an Excel spreadsheet where it says, let's figure out how much this house you're about to buy is going to cost you. We look at the number, and it's usually, yeah, see, we could afford it. Then I pull out another sheet where I'm like, okay, now let me chop, her income by 40% because she's on a maternity leave. Let me increase the expenses because babies cost money. And now let's look at where that mortgage is, and let's look to see. And then if she or he wants to take even longer time off of work, then we have to stretch those out into years. Or if they said, oh, no, I'll be returning after work after 1 year, it says, well, who's going to take care of, your little baby? And it says, oh, daycare. Okay, let me add $1,200 to your expenses. Now let's see if you can still keep affording that mortgage. And the numbers get ugly fast. And then usually they're like, you're right, Christian, our number isn't 600, it is 400. Because the problem is when a bank tells them 600, they go out and start looking at $600,000 places. Then they come to me, sit down, and I tell them 400. Then they start looking at $400,000 places. They come back and they're upset with me.
That's right. They want that $600,000 place
yeah.
is much nicer.
Yeah, they could barely even. Usually, when you go out looking for a $600,000 place, you tend to notice how much nicer the 650s are. Or the 700s. It's just a little bit nicer, that 650.
And that's true at every price point. There is no price point that I'm aware of where it just crosses the threshold and it's all good.
No,
you can always spend a little bit more and get it a little bit nicer.
Oh, well, you wait until you're looking at a 600 and then you go look at 400s. Oh, then you're depressed.
Well, that is depressing.
Then you're depressed. You're absolutely depressed. So, but if you start looking at 400s, like for us here in Vancouver, it's easy. If you're at a 400, you're not even looking at a house. There is no house for 400,000. You're already just looking at townhouses, just looking at condos. But if you're just looking at those, guess what? You'll find one. You'll find a nice one in a nice neighborhood that you want. But if someone told you, you could afford a Porsche and you go out looking for Porsches, and then suddenly I pull you back in and it says, no, you can't afford a Porsche. You can only afford a Honda Civic. Well, then you're just going to be upset. But if I tell you right off the bat, Honda Civic, that's your car, that's what you need to go out and look for, you'll find a really nice Honda Civic that you'll be excited about if you start there. Mm-hmm. But if you start with these big eyes and you start looking at these other things, that's where people start to get killed or, they get depressed. Oh, I can't believe I have to buy this. I have to settle for this. I have to settle for this. And there's this huge entitlement generation. This is, a completely different rant. And when it comes to housing, I sort of say that every generation has got a problem. And housing absolutely is a problem, especially where I live because it's so expensive. But if I go a generation back to my parents' generation, their problem was 11% interest rates turning into 18% interest rates and a huge part of this town losing their home. Mm-hmm. That was my parents' generation's problem. If I go back to my grandparents' generation's problem, it was World War II. And people were being drafted and people had to come home from the war and to rebuild. And, so every generation has got a problem, and compared to the last two generations, our problem isn't such a bad one. I'm giving people a quick 2-year solution to this problem over here. I'm saying delay the gratification of living on your own, delay the leasing the new fancy car, delay the high price lifestyle, even if your income can support it. You remember I lecture to a lot of physicians and dentists. Even if your income can support that lifestyle, I'm saying to delay it. Delay it until you are on solid ground. And in my opinion, solid ground is when the loans are gone and when the down payment is in hand. Then you get an affordable home. Okay, we have my no more than 35% gross income, no more than three times household income for the mortgage. Okay, now we could afford it. Now we get into this place. Now, whatever's left over. If you could afford a nice car, great. If you could afford nicer restaurants, great. But I think I think too often we go backwards, and they want the lifestyle, they want all the goodies, and whatever's left over, that goes to savings, and that savings turns into a down payment for a home. I think we got to go the other direction. We got to put those goals into place first. We got to get those down payments in place first. And then what's ever left over, that's my car bill or my restaurant bill. And usually it's quite small, but we prioritize the appreciating asset and minimize the depreciating asset.
Right. Now let me change gears and ask you about you're a financial planner.
Yeah.
In the United States, I have found that financial planners don't really deal that much, or it seems that way, and aren't viewed as the resource for home purchases. It's almost
Absolutely.
as though it's left to realtors and banks
Yes.
to be the advisors on a home purchase, which, I mean, banks and realtors play an important role in purchasing, but that's not part of a broader financial plan. And it seems like financial planners would be likely to be giving the best, especially like a fee-only financial planner, just getting paid to give good financial advice. But I find that very rare. Is that what you find?
Absolutely, and I think that's why I have so many clients. It's because no one else is doing it.
I noticed that on your the website, and that's one of the reasons I wanted to make contact. You had posted on one of my blogs a comment. I went and checked out your blog or your website, and you make home ownership and buying a house very much a part of the discussion, which is rare.
I think it's weird because I think you don't hear the word stockbrokers anymore. And I think that's like a dead word, but I think what's replaced that is this broad brush financial planner. And I actually don't even like to describe myself as a financial planner. I like to consider myself as a financial educator who happens to have a financial practice, because I think a financial planner here in Canada could be a mortgage specialist at the bank. It could be a guy who buys and sells you stocks. It could be so many different things. And here, when I think of planning, I actually think of, well, let's take a 360 view of everything that's going on in your life. And I probably am able to service them in 2 or 3 areas out of 5. I can't get them a will. But I have connections that can get them a will. I can't get them an accountant, but tax planning is incredibly important. I can't get them a mortgage, but mortgage planning is important. I can't buy them a home, but a realtor is really important. But those are all the things I try to figure out when I deal with my clients over here, because a lot of my clients are young. And what I find is that, my area is in insurance as well as in investments, but that is sort of at the end of the conversation. Because it's usually not where people are starting. They're usually starting with, I need some planning advice. I'm like, great, let me give you some planning advice. But what I find over here is that the planning advice that I give them typically starts with, how long do you want it to hold your loans for? How long do you want it before you move into a home? How long do you want it before, you delay your retirement? Let's deal with those issues first. And then usually what triggers, things like an insurance is if they buy a home, they might need some insurance to cover the mortgage. If they have a child, they need to put those things in place to cover any mishaps. But what I find over here is that home ownership, everyone wants to talk about buying a home here in Vancouver because it's so hard to buy one. And so I usually start with where they are. So a lot of times my workshops for young clients or potential clients hovers around buying a home because a lot of them don't know how to do it.
Interesting. How to do it, meaning sort of the technical, find a realtor, get a loan, or how to make it fit into like your financial plan? How to
make it fit in the financial plan, like how to come up with a down payment, how to there's some people who are clueless. They don't even know how much the down payment is. They don't know if it's 5% down. Like a lot of people here think it's 20% down.
Right.
But it's not. For first-time home buyer, it's 5% down. And then they don't know how long it would take them to save up for that based off of their income. I guess another thing, too, is that a lot of times they're confused with they've got loans, they've got they've got loans, they have no pension, and they have no down payment. but they do have a decent job and they've got extra money, let's say $500 a month. They don't know where to start.
Mm-hmm.
And whenever I talk to them, I says, well, it depends. And I usually don't tell them what to do. I just give them the option. I says, if you start with, the down payment, you'll have it in this amount of months or this amount of years. You'll then be able to get into this. You won't be paying rent anymore. We'll go from there. If you don't do the down payment and you start, same for your retirement first, this is where you'll be at retirement. If you delay it, this is where you'll be. If you deal with the loans first. So usually what we try to come up with is a plan, on what to do with that extra amount of money. And I never tell them what to do. I give them the options, but if they ask my opinion, I'll usually make it numbers based. I'll say, well, the math shows that, unless, for example, it makes sense to go buy the home. Why? Because it looks like if you don't buy the home, you'll be renting for 7 years. And if you're renting for 7 years, none of that money goes towards the equity for your place.
Right.
So that's sort of one of the things that I try to do when I sit down with someone at the beginning, to try to say, well, what is the overall strategy over here? What is it that what is it that you're trying to accomplish?
Planning a life.
Yeah.
Is, and very few people plan at the level they need to, certainly as it relates to a home purchase. That's where I see it. It's like people are shopping, like they're at the mall for houses, and they go see a bunch of them, and it's comparing one house to another. And this kind of conversation is in the background, the kind of detail where it's going to be, what about kids? Where does that fit in? Where's your retirement? What about vacations? And how do you make all of this come together? And usually they'll just spend as much as the bank says they can, and then they end up with a life they didn't necessarily choose.
Absolutely.
It's a pretty box, though, and
absolutely,
everybody's got their own bedroom and it's granite in the kitchen. Christian,
Sure.
I really appreciate you taking the time, and perhaps we can do this again sometime. You've got a lot of thoughts that I'd like to dig deeper into, but thank you for joining us today.
Yeah, no problem. If your listeners grab some piece of value from this, I hope I've been able to help some people out there. I think my story is pretty simple. I lost my home when my family lost their home, and then when I got older, I was very frightened of losing my own home. I wasn't making much progress on my student loans, so I pulled the trigger. I was the guy who went in reverse. I lived on my own for 3 years, then went back into a relative's house, living rent-free in a basement suite. And it took me 1.5 years to realize I just paid off all my loans in 1.5 years. Mm-hmm. And then in another 1 year, I realized that I just saved up for a down payment on a home. And then in another half a year, I realized by this time I was engaged, I just paid off my wedding, my portion of the wedding. So I rolled into a wedding, getting married with a newly bought home, 0 debt from the wedding, and 0 loans. And what was the sacrifice? 3 years. It was a 3-year sacrifice. And did it seem like a sacrifice? No. I was at basically my now wife's, but I was over at her place a lot. We were out to dinner. I worked like a dog as a young teacher in those days. Those 3 years went by super fast. But from a financial standpoint, I turned into a huge head start. And then when my wife and I first got married, we sacrificed even more. We lived off of one income, mine. We banked her income. What did we do with her income? We got a really nice head start in investing in real estate and putting money away for our retirement. And we slowly upgraded when those kids came along. Because when those kids came along, we were already used to living off of a lesser dual income anyway. So there was very little change in our lifestyle when they came along. And then I realized this is the way to live. This is the correct way to live.
I think that's it right there. This is the correct way to live.
Yeah, absolutely. But I got to run.
All right. Christian,
thank you for having me, and then let's connect again.
Let's do it.
Okay. Bye now.
Thanks for joining us on the Surviving the American Dream podcast. If you found this helpful, please leave a comment and share with your friends or family, and especially anyone looking to make their home happier.